Good morning everybody, it's Christian from Serene Education with the 4 major analysis update for the 21st of August 2012. Hi guys, hope you had a fantastic weekend. Nikki and I were teaching yesterday, so I did not do any video analysis yesterday. Okay, let's have a look at the euro. What's been happening in the euro? What happened yesterday and Friday? Well, Friday and yesterday both spinning tops at a major resistance level. So ideally we'd like to see a positive, we want to see a decision candle. Asian market this morning trading above that 12,3500 and long may continue. It is testing now the 50 period moving average, this purple line, which has been the downfall for pair as we headed into this major resistance level, apologies guys, at 1235. So you can see here, once we got above the 12,3500 mark, the 50 period moving average was in play and we failed to see it actually breaking that. So a nice thick membrane, very strong support and resistance level at 1235. We do need to see it punching higher, and we do need to see a confirmation signal because the last 2 days have been indecisive. Okay, and that indecision coming around a major support and resistance level. So you're going to see a lot of indecisiveness or speculative trading around a major support and resistance level. We do want to see a decision. In this case, you can see that we are trading above the 1235 during the start of the Asian session. We are trading it into the European session. It needs to stay above here. The longer it can stay above here and the longer it can push higher and found support or build on support above this 12,3500, then we should see price kicking on to the upside for the remainder of this week. Failure to do so, we could end up looking at something like this again. Price pushing through this membrane, the 50 period moving average, and then during the latter part of this trading session this evening into the US, we're going to see price pulling back and closing lower. If it does, and then we're going to have another indecision candle, something similar to this, and we could see price pulling to the downside again, back into this consolidative range where we've seen price nesting or supporting itself just below the 12,300 mark. So between the 12,300 and the 12,3500, we've seen price consolidating for almost a week. Okay, so we do need to see a bullish engulfing candle to the upside if it maintains this levels above the 12,3500. So intraday, let's have a look. You can see our plus my 12,3500 mark, and you can see prices above it. You can see on a number of occasions on the 4 hour, we have been above here. However, the candle hasn't been all that bullish. It needs to be a nice folding candle with a lot of decision, confirming the decisive upside movement, and then we can target areas such as our 1242 or the 1244, 4300 mark. Price has been there before, we can always head towards that, but we do need to see price finding support. Okay, here again you can see the breakout, the pullback, and then a reattempt of those highs which failed. Here again we do need to see a breakout, a nice juicy candle to the upside, support being found, and then another kick to the upside. Here, break, support, and a failed kick to the upside. Okay, so it's imperative you guys be patient here, especially on this 12,3500. We are going to see a lot of whipsawing. You can see a lot of backwards and forwards between this major support and resistance level. It's imperative that we see price moving away from this as soon as possible. But if we do get some nice sentiment, bullish sentiment on this, pushing it higher, it will stay away from here. Okay, otherwise it'll find a reason to come back to this level yet again. You can see that we went away from it and came back. Went away from it, came back. Went away from it, came back. And it's just going to be moving backwards and forwards within this consolidative range. Some people would probably potentially choose not to trade in this range. Okay, they can actually set alerts on the actual markets, on their broker accounts, telling them, listen, yeah, I don't want to see, I want to be actually told or give me a confirmation signal above the 12,400 mark or below this area here, this consolidation area here at the 12,2500. RSI below on the 4 hour is still above 50, so you can still see that sentiment is generally still looking positive. And if you look at the hourly chart, let's have a look. You can see a lot of indecisive candles going into this major support and resistance level here. A lot of doji spinning tops, and however still taking us above. You can see the RSI is above the 50 now, so we know that sentiment is generally genuine sentiment to the upside, and most importantly the CTC is telling us that we have our blue arrow, blue candles, and all our moving averages are below price supporting her on the upside, and our CTC on the other side is very much blue, and we are trading above a major support and resistance level. It needs to stay above here now. Here you can quite clearly see a lot of breakouts above this area, but it failed to actually take the momentum forward. Okay, a lot of indecision candles, backwards and forwards, a lot of tweezer tops here, railway tracks we call them, a lot of indecision, and that's it just really showed that there was no genuine sentiment behind this once we'd actually attempted these highs. So it's imperative that once we're above here, we get a nice bullish engulfing candle. Yes, we are going to lose a lot of pips of the market. That's fine, because if it can stay above the 12,3500 and build on that, long term, we're just going to see upside. Okay, so we're going to lose a bit to start with, but that means long term we can actually start seeing price moving higher. And if it starts moving higher above this 12,3500 mark on the weekly, we should be seeing price tackling that 12,700. So 12.35 between 35.927, you're looking at roughly a good 400 pips away. So you give a 50 pip range away or 100 pip range away, now you're still in for another 300 to 350 pips long term. That's not much to ask. On to sterling, let's have a look and see what's happening in the weekly. You can quite clearly see here 15,750. There's a major resistance level for this pair. Has been for a number of months through June, July, and now going into the latter part of August. A lot of resistance here, guys. You can see all the moving averages on our weekly all together, confirming that price action is doing nothing. It's just consolidating. It's going sideways. There is no true directional momentum on this, and you can see quite clearly everything is just stagnant in and around this area here. So 15,750 becomes a major resistance level and has been for a number of months. The CTC is telling us we should be looking for positiveness in this move, and you can see quite clearly that over the past couple of months, price has been edging up to the underside of this major support and resistance level. It's been doing it. This 15,300 has been a major support and resistance level over a number of years. You can see we can go all the way back to 2010 to see the first part of the support, and you can see a major support and resistance level at this area. If it got below 15,300, we'd see a massive sell-off. There's a huge drop. Well, there's a slight pause at 14,900. But the next potential target will be way down here at the 14,300 mark-ish, 14,250 mark. So there's a lot of clean air to the downside if and when we broke through 15,300, and we're still below this institution moving average. You can quite clearly see now, for the first time going into this week, we are trading above that institution moving average. Ideally, it does need to be trading well above 1575 though. Okay, we've seen it trading above the institution on a number of weeks, but it failed to get above that 15,750 mark. It is imperative that we get a break and close above that. Okay. Otherwise, if you look at the daily, I've drawn on my support and resistance line, so you can quite clearly see at 1575 coincides beautifully on our daily with the institution moving average. You can see on the Asian session this morning, price is trading above the institution into this major support and resistance level here at 1575. Ideally, getting above at least the 15,800, so you're giving away 50 pips or so, would be ideal for this candidate. Okay, because you can quite clearly see once we get above this range over here, we have this 50 period moving average, which happens to be a major retracement area. And you can see once we poked our head above this on two occasions before on the daily, we saw price revert to the downside. So ideally, this is going to be the Bermuda Triangle trading on the other side of this. We do need to see a bullish engulfing candle to confirm that. So ideally, if you want to be looking this long term for any sentiment, look for 15,800 to be broken. Then we can see a nice juicy target above us at 15,900. So there's a good 100 pips of target there, followed by another 70 odd pips to the upside towards that 1600, which is also a major support and resistance level up above the 61.8 retracement area. So you can see on our intraday, you should be seeing price moving higher. So the swing high. So if you go to a 4-hour chart, you should see that momentum moving higher. You can quite clearly see here we go on a 4-hour. Price swinging higher, swing high, swing high, swing high, swing high, and staying and maintaining above the institution, which is positive. And most importantly, above all the moving averages, was also supporting price to the upside. You can quite clearly see that price, as we speak now, is heading into this 15,700. But on so many occasions before, prices reverted to the downside as we headed into this major psychological barrier at 1575. Pull back, pull back, pull back, pull back, pull back recently, and we could expect another pullback here. So if this is to remain bullish, rather wait for price to close above us. Here you can see quite clearly here on the 4-hour moving and trading higher in that 4-hour time frame, but closing lower. Exhaustion candle at a major resistance level, price just fell back. Okay, it's the same here. So you're going to be patient now, guys. We're seeing price just sitting here, testing price support and resistance levels on our majors. I know you're not trading anything. I know it's not giving a lot of potential trades. However, this is where you have to maintain your patience. Okay. Patience is a virtue. I know it's a crazy thing, especially you're getting itchy fingers. You don't want to sit there doing nothing. That's okay. Patience. You shall be rewarded. Okay, you have to be patient in trading, otherwise you will get stung. So what would I do? On my hourly, this is my entry candle. You can see RSI pretty much spending more time above the 50 range, telling me that we should be looking for bullish sentiment. And yes, you can see the upside trend price moving above the institution and heading towards that all-important major support and resistance level here at 1575. What I need to see, ideally, I'm not going to trade this until I get a nice break and close above 1575. Other option is to see price failing here, get a nice bearish engulfing, a shooting star, in an evening star, a bearish arami of some sort at this level to see if I can target a quick trade to the downside intraday towards this trend line, back towards the institution. It's that simple. Okay, I'd rather not trade against the overall trend, see if I can see a pullback and capitalize on the pullback. Otherwise, hold on, put my hands under my butt on my seat and just wait patiently for a break above the 1575 if this is genuinely going to continue to be positive sentiment. Okay, you can see quite clearly here on a number of occasions price actually went blue to tell us we should be seeing a buying opportunity, but that buying opportunity came at the underside of a major support and resistance level, so there was no trade because of that. If it maintains this blue across the board and our CTC can remain as positive as it is and trading above all the moving averages, including the RSI, to tell us we should be looking for positive sentiment, it needs to close physically above 1575, and then I will look at looking for an entry. Otherwise, I'm still waiting patiently on the side. Moving on to the US dollar Swiss franc, let's have a look and see what's been happening on the weekly. It's imperative we always have a look or have an understanding where price is trading on the longer term time frames. That will dictate what you're likely to see intraday. Okay, so it's imperative. You can see here what's been happening on price. Well, you can see price over the last couple of months, since August of last year, has been trending to the upside, a nice positive bullish trend to the upside after a nice hammer, after a long major sell-off for the US dollar against Swiss franc. Intervention really got us going, and we've seen price heading higher. In doing so, we've seen price recently testing this major support and resistance level here at 1000, a nice psychological round number, as we saw price in the past, noticeably through October, November, December of 2009, going into 2010, a lot of price support here, and then resistance in 2010. Okay, so that will be a nice target for price, as we've saw people buying into this previously or recently or long term. That would have been a nice actual level back towards the institution moving average as well. And as we got to it, we had a bearish engulfing candle, which told us that sentiment was looking negative now. Profit was taken, and sure enough, we saw price reverting to the downside. Okay, so where is price? What's price doing now? You can see quite clearly we have a little bit of hesitation here, and that hesitation is happening around the 970 mark. So that's another prior resistance level, and that's become a support just recently over the past month or so. So 970 on our daily, it becomes a major support and resistance level. You can quite clearly see here the black line I've put in is there to tell me that. And I need to be well aware of these major support and resistance levels, because that will dictate to me what I'm likely to see if I'm looking for trades, and where's price trading right now in conjunction to this major support and resistance level, right at it. So will I see any further selling or buying? Not likely. Okay, so intraday I'm not going to really see any further downside movement. I would have to wait patiently. You can quite clearly see the two prior candles, so Monday's candle and Friday's candle, are indecisive candles. One was a spinning top on Friday, yesterday was a doji. Very indecisive candles at a major support and resistance level. What I can confirm is that we're having swing lows, and price is being squeezed now between attempting the highs and this major support and resistance level here at 970. What we would need to see, if this is to still remain negative, because you can see it's been hugging this 970, it hasn't really bounced higher with momentum after it touched it, is we need to see a bearish engulfing candle, and that bearish engulfing has to close below the 970 mark, and in doing so it'll close below the 50 period as well as the 20 period moving average. We are seeing two parts of our 4-part strategy template requirement happening. We have a red arrow followed by red candles. We need the histogram on either side to go red. That would only occur once if and when price closed lower. Okay, so here again we need to be patient. So that means 3 of our 4 majors are sitting at resistance and support, and we have to be patient because we need to see a confirmation signal. Here again, the US dollar Swiss franc is no different. We are trading at a major support. We need to be well aware that we could see a potential bounce, because it's bounced so many times over the month or so. Okay, and if this is to remain bearish, we need a break. If it's to be bullish, we need a bounce. End of story. That's all we need. Okay, so if you're looking at intraday stuff, look to see if you can put in a triggered alert on to tell you when you're getting a certain bounce and close above something. So here, for example, on the 4 hour, you can quite clearly see a lot of shooting stars, hesitation, bearish engulfing. As you can see, the downtrend, swing low, swing low, swing low, dictating prices moving lower since this major high here at 1000. However, you can see prices stalled at 970, so I'm well aware of it. And you can see prices trading well right into the 970 as we speak. Okay, here again you can quite clearly see we had a breakout recently on 970, and our 4-hour candles in particular looked very indecisive once we got below that range. We want to see a nice bearish engulfing. We need a candle that looks something similar to that. Yes, it would mean that we're going to lose a bit of momentum, or quite a large chunk of profit to start with. I mean, if we get a candle that size, it doesn't need to be that candle, but it just needs to be a decisive candle. You can quite clearly see on a lot of these candles, once we got below here, were very wicky. Okay, a lot of wicks. When you see a lot of wicks, that means the bodies are tiny, and if you see a small tiny body, that means there's been a lot of indecision. Okay, we don't want to see indecision once price has broken a major support and resistance level, because it tells us that the sentiment is generally not behind that break, and therefore we will not see it moving lower in this case. Okay, so we do need to see a confirmation. The market's got to confirm to us it is generally a break with conviction, and we should see price continue in the direction of the breakout. So here again, we have to be patient. A nice bearish engulfing candle break of 970 would confirm that we have a red arrow, red candles, the CTC on the other side is red, and most importantly, our moving averages are red. However, we're not going to take a trade just on that, because we are trading at a major support and resistance level. Got to see a break first. Otherwise, what could happen is we could see a bullish engulfing candle here, and price could revert back up towards this trend line to the downside, which would be coinciding with the 50-period moving average. Next up, the US dollar, Japanese yen, the last pair of the day. Let's have a look at the weekly. What's she been doing? Well, you can see I've plotted all my major support and resistance levels on here. There have been a noticeable number of consolidative ranges for this pair on our weekly chart. You can quite clearly see us through August, September, November, December, January of 11 going into 12. We had a lot of consolidation here between the 76 and 78 mark. Break above that, saw price testing the 80, broke above that support, and really moved with a lot of momentum through February of this year, up towards that 8400 mark, where it failed miserably and price pulled back towards the 80. Now we moved below the 80, but we were trading between. You can see price consolidating between the 80 and the 78 now. And last week, a very bullish candle on support. We had 3 consecutive weeks of support here, very indecisive, indecision. That's our decision candle. But that decision candle's come now into the bottom end of the 80. Ideally, we actually see 80 being broken. So if we look to the daily charts, let's have a look and see the momentum. You can quite clearly see here a lot of consolidation at a major support, and the longer you find price moving sideways on a major support, the more likely it is that price is going to find a reason to actually start buying into it, and henceforth why we had a move to the upside last week. Through last week, saw a nice move to the upside, breaking above the institution moving average, trading above all our moving averages, and in doing so you can see prices now consolidated above a price support and resistance level, and you can see a pullback. So we're having a bit of an evening star now on our daily, where we've seen price moving higher, and then we've had indecision followed by a bearish consolidative candle now, and it's pulling back towards the 79.20. If price found support above 79.20 now, then we could see a breakout, the pullback, and then a continuation for the remainder of this week towards that 80 mark. Make sense? Okay, all the moving averages still below price, hence it's now going to be potentially supported price as she moves higher. Notice the CTC on either side. We have blue arrow, blue candles. CTC on our side is blue. All our moving averages below price. It confirms that we should be looking for bullish sentiment, hence the reason why it's all blue. As long as it maintains above 79.20, then we should see that momentum still governing or favoring the upside. Okay, so here again, patience is a virtue. 79.20 needs to see support. Look at your intraday charts. 79.20, look for a nice bullish engulfing candle. As our 4-hour chart, you can quite clearly see the CTC is very much blue. All the moving average below price, bar the 20-period moving average. But you see that 79.20 I've made here, and price is trading above it. Look to see a nice bullish engulfing candle here. We might see a fake out, a nice little hammer here. Price moving lower. Do not feel the need to get into it. You do not want to be sucked into it, okay? This is where patience is a virtue. Wait for a nice 4-hour candle in particular to confirm direction. If the 4-hour candle closes lower, then we should start looking for potential pullbacks, and then you can look at the start of the trend to the high of the trend, and then look to take profits at these areas to the downside. Mostly 50% at 78.90 would be a nice intraday chart trade if and when price closed lower. 78.70 would be another one back towards institution. However, if that fails to occur, we get a nice bullish engulfing pattern here. Just a support pattern, a hammer, a bullish engulfing, a bullish orami, a morning star. So we have a lot of selling followed by indecision followed by a bullish engulfing candle. That's a nice morning star at a major support, guys. All these candlestick patterns have to happen at support. hammer has to be at happen support at a downtrend. Bullish engulfing has to be on a support and resistance level on a downtrend. Okay, evening or morning star happens at the bottom of a downtrend. You can see me pulling back. This is a downtrend at a major support and resistance level, which is in this case 79.20. Okay, if we do get all that, then look to see if you could target back up towards these areas here at 79.55, but ultimately way up towards that 80 mark, which happens to be our long-term target. That's it for today, guys. I hope you enjoyed this morning's analysis. Build into it, guys. Build that picture. Take what's around, what's available to you on the chart, plot your major support and resistance levels, look at where price is trading in conjunction to that, and build a picture, a psychological picture of what's been happening in the market. Bring your candlestick pattern analysis into it. Okay, we're looking for candlesticks to confirm sentiment out there. Is it genuinely positive? Is it genuinely negative? Is it still indecisive? We don't trade indecision. So this is where you've got to be patient. We are seeing a lot of indecisiveness at the moment now in our larger time frames, especially on our majors, because we're trading into major support and resistance levels. This is where we need to be patient and look at the bigger picture, and just be patient enough to wait for price to actually do what it needs to do. And then once it's done exactly that, ticked all our boxes, put all those eggs in our baskets. If it's done exactly what we wanted, then we look at entries, looking at support, and looking at money management, and just pull the trigger. Keep it very, very mechanical. Take the emotion out of trading, and you shall be a lot more profitable. Okay, that's it from me today. Last thing, have a look at the news. Apologies, I'll keep moving to just see if there's any news out there. I know that Sterling's got some news this morning on public sector net borrowing figures. Important one for sterling. We need to see how much borrowing has been happening out there. The previous figure was a positive 12.1 billion, so there was borrowing of 12.1 billion pounds. The forecast is a negative figure of negative 1.7 billion. So there's not a lot of they're expecting less borrowing. Okay, quite a negative sentiment. So will that favor in sterling? Will we see this really moving and helping sterling to find that resistance level? And we're seeing a pullback at 1575. It remains to be seen. So 9:30 this morning GMT, that's expected to be something we should be looking at. We also have the industrial order expectations at 11 a.m. So public sector net borrowing, the industrial orders expectation, we're expecting a negative figure from the previous figure. That there again could waver quite heavily on price action for sterling against the US dollar. Where are we trading now at a major resistance level? Could these figures come out negative to push sterling away from the 15,700 lower? Now you start thinking, okay? And then the US dollar, the US dollar this afternoon at 1 p.m. we have the FOMC meetings. We've got in this case member Lockhart speaking, so it's important that we make a note of the FOMC because they tend to come out, well, a lot of speculation around these FOMC meetings because they're trying to see if they can find out if we can see any change in interest rates, especially in the US session. So they're again important. Otherwise, that's me for today. It's already 24 minutes into my speech. You guys are probably falling asleep. I'm going to leave it at that. Have a fantastic trading day, guys. Keep it simple. Back it up with sound money management, and you shall not go wrong. Have a great one, and I'll see you first thing tomorrow morning. Until then, trade serenely.